Hello, and a massive hello to everybody. Hope we're all having a great day, a great weekend. This is 50 Pips, rocking and rolling, 15th of May, 2016. No trade calls or recommendations or results for their own stuff. And the fact that you're listening to this, as always, means you've read, you understand, you accept all the disclosures, disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, welcome everybody. Let's see what we've got shaping up this week. So again, Monday should be fairly quiet, right? But apart from we have a bank holiday in Germany and France, in Switzerland. But fairly steady stream of data throughout the week. On Tuesday we got some data out of Australia and New Zealand. We've got a bunch of U.S. data. Building permits, CPI. We got the GDT price index for Kiwi 2 out too. Wednesday also more data out of New Zealand. So we got a bunch of data out of UK, which is going to be interesting to see how this continues. Data hasn't been that great, and then we also have oil inventories, and we got the FOMC minutes. Thursday we got again a bunch of data. We got unemployment out of Australia, we got retail sales out of the UK, we got unemployment Philly Fed, etc. So all the way into Friday, where we got those first day of those G7 meetings, and we got the CPI's core retail sales out of Canada. And then on Saturday we'll have more G7 meetings, so something might hit the wires in terms of comments. We'll have to wait and see. So where does that put us? What are we looking at? So yes, I'm going to do things a bit differently here. I'm just going to look at the longer term charts. Then I'll post the detailed charts with all our levels on them during the week, but just to switch things up a little bit here. As usual, the three moving averages we have here are the 50, the 100, and the 200. Again, I don't really use them. I think they're useful to show what's going on and to explain the moves and to help the commentary, really, right? So what's going on here? Well, again, first of all, I think last week played out quite nicely. We really can't complain, right? So basically this was last Friday, right? And what we set our expectation in last week's video was we'd expect the week before OPEX, we'd expect this to go up Monday, Tuesday, and then dip towards the back end of the week. We put in a high on the week on Tuesday, and then it was a steady move back down towards the back end of the week. So, as always, we like to talk about things before they happen, not after they happen. And so, fairly classical. Now we're going into OPEX. We'll have to see how the week shapes up, but let's see if a bid tone comes in. In terms of a bigger picture, what's happening here, right? We're just hovering, right, at highs. We're still stuck inside that broader range, which we have been discussing, right, which is really the 2100, 2050, and 2000, right? So all things being equal, not an awful lot has changed. We're still stuck there, right? What's going to be interesting is that how we behave early on in the week. Now, it wouldn't be surprising to see this try to extend a little bit lower opening in the week. And keep in mind that you've got a lot of support coming in further down, all the way further down. You've got these two moving averages coming in. You've got this area, right? The market caught a bid before. So it's going to be very, very interesting. Now, assuming that we come back down into the week, and especially at the beginning, we don't break the support hard, then expect to see some kind of a correction higher, right? It does look heavy. We've got to fail there, but I think it's still inside the range, and we just have to be a little bit patient. Now, one thing I will say is that going into the week, if we start to get closes below, daily closes below these moving averages, daily closes below the 2000 level, then things, especially early in the week, things could get very aggressive, and I would not be surprised to see an acceleration to the downside, right? All these key areas coming into play. But I think it's still a little bit early to say. It's going to be about how we react around these moving averages around that 2000 level. And keep in mind, we're still stuck inside a range. Okay, so also from a daily perspective, you see how many different, not only you've got this support coming in protecting that 2000, but just below you've got these two moving averages here on the daily, right? So it's going to be a pretty difficult nut to crack, so we'll have to wait and see. And again, on any bounce, it'll be interesting because you do have, trying to form this kind of heavy pattern. A lot of people will be talking about all these these repeated failures, right? And that if we break this area, we'll start to look very, very heavy. But that's really the focus, right? We need to get more acceleration to the downside, and it's still, we're right back at that 2050, so pretty much a mid-range, right? So again, interesting action, and the key thing is that last week played pretty much exactly as the way we would have liked to see it play out, so quite interesting. In gold, what's going on gold? So again, gold is hovering at those highs. We still, what we're saying is, as long as these 1310s and all these failures into these 1300s can't get any traction, we wouldn't be surprised to see this have to correct lower before it goes back higher. And again, we'll have to see what happens. Right now, it seems to be stuck inside this broader range. Remember, the range we've been talking about on gold is 1300, 1250, and 1200. So as long as we're stuck in here, much to do about nothing. You can see that 1250, you've got the 50 DMA coming in play here, so that's really going to be key. So again, that's the level to focus on. Daily closes above, we could still try to rally up, but if that starts to let go, then we would not be surprised to see that 2000 come into play. Sorry, 2000, getting confused with ES, that 1200 coming into play quite quickly, right? And that's still pretty much inside that range, right? No big change. The same way as the ES gold is staying pretty much inside the range. So what else have we got? Crude also is going to be interesting. Crude, I think here the key focus is how we're going to trade above these 4350s, 44s, right? It still looks like we're trying to catch a bid here, and as long as this level continues to hold as support, we could see continued moves to try and print new highs. But I would not be surprised to see this accelerate aggressively to the downside again, should we start to get daily closes below that level. What's interesting is you can see in terms of the action last week also that we tried to clip above those highs and attract new buyers, but we couldn't get any traction. So shorter term, these are the two key areas, right? Is the market going to be able to attract new buying if we take out those highs, or is the market going to be able to attract new selling if we break that area? As long as we stay inside this whole zone, I think it'll likely be very, very choppy. But clearly at these levels, I think probably in terms of velocity of the move, in terms of longer move, it could easily be back to the downside. We'll have to wait and see. Yen, we had that nice reversal right at the 200 on the weekly, right in line with that previous resistance support zone. So it looks like it's trying to hold that low. I think it's very tricky to try and trade too tight inside the range. As long as we hold these lows, then I would not be surprised to see this continuing to rally. Could be all the way back up into even into that 115s. But here, it's going to have to. It's got some. It's going to have to deal with all those moves to the downside, right? All that series of lower highs, right? So the next interesting level to focus on the upside is that previous break zone, right? So as long as we're here, and that's pretty much in the 111, this is going to be a very, very strong support. We consider these 111s to be the pivotal level, right? Bull bear line going into the week, and you see this previous strong support here. What happens if we extend that? That's coming in just above those 1550s, right? So we expect going into the week, in general, this is the high resistance zone, big support, and this is the pivotal bull bear line for Momo and flows going in the week, and we'll just have to see how we resolve, right? But it looks like that low may be in. Euro, what's going on Euro? So Euro, again, we read it quite nicely, holding that level. We're expecting a move back to the lower end. At least we're talking about 112s here. 110s can come into play here. You see how we're stuck inside this 100 and this 50 on the weekly, right? If you flip that back into the daily, what's happening is we're starting to come into an interesting support here. If this holds, you'd expect it to continue to try and rally. If it breaks, you'd expect it to come right back down into these two moving averages, into this, 111, 110 area. Our hypothesis hasn't changed, is that we've put in a swing high on the dollar across the board here, and that's what it was on euro, so we're expecting it to come back down lower. An interesting zone we like here is that whether you're looking at this whole rotation higher with all this series of higher highs and higher lows, right, this channel, you see that there's a lot of confluence coming back down towards this area, low end of this air, the low of the channel, and those two moving averages to the downside. So we still think market will likely try and come back down. Now we'll have to see if it's going to be straight down. We know markets shouldn't move for a long period of time in one direction, so here maybe we'd say a little break, little pop to find sellers again, and then come back inside that area. But nothing has changed in terms of our broader outlook on the euro. What's going on cable? As we said, no big surprise as far as we're concerned. It's all Brexit risk, and the edge in terms of trading is short or long, right? Those are the areas and then on the shorter time frames we're playing those. So far not an awful lot has changed. If you look at it on the daily, this looks particularly heavy, also depending on how the data is going to come out, how the market's going to react, but it's fairly neutral right here now, right? So on any bounce you could easily see a rip back up, and we're talking about bigger term picture back into these 148s, but equally there's no reason why this can't come down at least into this whole series of higher lows all the way back into the 141s, 142s. And if that breaks, then, don't be surprised to see this moving very aggressively to the downside. But it's fairly neutral here. We'll have to see how this trades going into the week. What else is interesting? Aussie, no surprise, we're short for this move back into this neutral zone here, at least with that 100 and the 200. That's pretty much done. Going into the week, it looks like it's holding very, very heavy, right? So what I would focus on is watch out on any breaks and any bounces that are sold heavily. You'd expect this to continue to try and move back down. Keep in mind there's an awful lot of Aussie and Kiwi data out this week. We'll have to see what happens. To the upside, if this really rallies, you'd expect to see those previous supports to act as resistance, but you'd expect to still see sellers coming into this. No big change in outlook. On Kiwi, what's going on Kiwi? Again, it's desperately trying to hold this whole series of higher highs and higher lows, but it looks like it's starting to suffer a little bit. So going into the week, I think still the focus is going to be on more downside, and especially if it loses this whole series of higher lows, this could get extremely heavy. This could be a bounce zone, but this should be a decent resistance for now. CAD, pretty much in line with crude. We'll have to see what happens here. It's trying to bounce very aggressively here off that 125 zone. What we've been talking about, the fact is that 129 being pivotal, and right here you can see there's a multitude of areas here, right, with this previous resistance coming in here, previous support. And right now, as long as it holds here, it looks bid, right? And I'll probably try and regain this area. But keep in mind that you've got a sell area that's going to come into play here with this moving average and this previous level here around those 135s. So you could see a lot of wheeling and dealing inside this zone, a lot of two-sided action. But I think the next sustained break, so daily closes back below this 128s or daily closes back above the 135s, it could be very aggressive one way or the other, and I'll probably just be linked to whatever crude's doing. But I'm not a huge fan of trading this right now. I think there was a lot of edge at extremes here. It's a very choppy zone. You've got a lot of supported resistances. I think it's much pure play to trade it through the action on crude. Euro JPY, again, holding very heavy. It depends on the BOJ, but clearly there is it's not looking pretty here, right? There's an awful lot of support, but if this lets go, this could get very, very heavy. So it looks like the market is still pressing this and selling every rally, and we'll have to see what happens here. And especially euro across the board is looking fairly weak. You've always got the problem of BOJ, so don't be surprised if you see something being announced and then you get a big rally back up to this multi-confluence zone up here. But it's looking particularly heavy. I think that if you're looking to trade euro to the short side, euro USD is a much nicer play, right? And if you're trying to trade yen for a pop in general, I think USD JPY is a pure play. So I just don't think this is that interesting. I think there are far more interesting ways to express a similar view, or whatever view you may have on that on other instruments. Euro GBP kind of stuck here. I think it's the same kind of discussion we have on Euro JPY. I think if you're trying to play, express a view here, I think Euro USD or GBP USD are a much purer play. Here, hovering here, this is a strong previous resistance zone. To the downside, you're going to have this 100 coming into play. To the upside, you're looking at those highs. But again, very, very choppy. I don't think there's an awful lot of interesting stuff to do here in this location, even though I suppose a lot of people were trying to sell any rally here to see this coming back down. We'll have to, we'll patiently have to wait and see. And USD CHF, no big change. We discussed that what we thought about the dollar. So here it's still holding this low. It had a nice little fake out here. So as long as this holds, we expect this to continue to try and rally and continue to hold a bid tone here. It's going to have to get above this whole area, very, very quickly. But it does look like it's holding fairly a bid here. And this is the key zone, right? You've got a lot of chop here with all these moving averages. The moving averages are starting to flatten out, but this is the key support. And we'd be looking at this, and it's key bull bear line for either a rip back up towards parity or some selling, right? So that's pretty much what we're looking at, guys. I'll post the charts with, clear support and resistances. I just wanted to do something a little bit different today. As always, thank you so much for following. Thank you for sharing. Thank you for retweeting, guys. Have an awesome one. I'll see you guys around soon. Take care. Bye-bye.